Have you ever wondered how to invest in real estate without buying physical property? Now, that's a question that might have crossed your mind. We often associate real estate investment with purchasing houses or commercial properties. It's the most common notion, isn't it? Yet, there's a twist in the tale. Imagine being able to invest in real estate, enjoy the benefits, but not having to deal with the hassles of property ownership. No dealing with tenants, no maintenance issues, and no property taxes. Sounds too good to be true, right? But it's not a fairy tale, it's a reality. There's a way to invest in real estate that doesn't require you to own any physical property. It's a path that could potentially open up a new world of investment opportunities for you. Yes, you heard it right. You can invest in real estate without the hassle of owning any physical property. Intriguing, isn't it? So, what's this magical method of investing in real estate? It's through something called a REIT. REIT stands for Real Estate Investment Trust. Think of it as a bridge that connects you to the fascinating world of real estate investing. These are companies that own, operate, or finance income-generating real estate. Just like how a company can be divided into millions of shares, a REIT divides a portfolio of real estate into shares that people can buy and sell. This way, even if you only have a small amount of money to invest, you can still get a piece of the action. It's like being able to buy a slice of a cake instead of the whole cake. REITs work by pooling the resources of multiple investors, similar to a mutual fund. This pooled fund is then used to invest in a portfolio of properties. This could be anything from shopping malls, office buildings, to apartment complexes, and even data centers. And here's the best part. REITs are traded on major stock exchanges. Yes, you heard it right. You can buy and sell REITs just like you would with shares of Apple or Microsoft, right from the comfort of your home. So you see, REITs offer a way to invest in real estate without the need to own a physical property. But how does it work? Now, let's delve deeper into how REITs function. Imagine a giant pot where many investors pool their resources. This pot is the REIT, or Real Estate Investment Trust. The money in this pot is then used to invest in a diverse portfolio of real estate. This could include anything from office buildings and shopping centers to apartments, hotels, and even hospitals. Essentially, the REIT becomes a landlord of these properties, earning income from the rents paid by tenants. But how do you, as an individual investor, fit into this picture? Quite simply, you purchase shares of the REIT on stock exchanges, just like you would buy shares of a company. These shares represent a fraction of the REIT and its underlying properties. Now, here's something unique about REITs. By law, they are required to distribute at least 90% of their taxable income to shareholders every year. This means that the majority of the profits made by the REIT from its real estate investments flow back to the shareholders. Essentially, you earn a share of the income generated by the properties in the REIT's portfolio. This mechanism creates a steady stream of income for shareholders, making REITs particularly attractive for income-focused investors. In essence, when you invest in a REIT, you're buying a piece of the income generated by its real estate investments. But what are the benefits? Investing in REITs comes with a host of benefits. Let's dive right in to understand them better. First off, we have diversification. REITs allow investors to spread their risks across different types of real estate properties and geographic areas. This means you're not putting all your eggs in one basket, a strategy that can help stabilize your investment returns. Next, we have liquidity. Unlike physical real estate, which can take months to sell, REITs can be bought or sold on the stock exchange at any time, just like any other publicly traded stock. This provides investors with the flexibility to adjust their portfolios as needed. Thirdly, REITs offer regular income through dividends. Most REITs distribute at least 90% of their taxable income to shareholders annually. This can provide a steady stream of income, particularly attractive to retirees or those seeking consistent income. Then there's the potential for capital appreciation. Over time, the value of the properties within a REIT can increase, and so can the value of the REIT shares. This could result in a nice profit when you decide to sell your shares. Finally, REITs provide access to real estate investment without the need for large amounts of capital. You don't need to buy an entire building. You can invest in a fraction of many properties through a REIT. Sounds like a great deal, doesn't it? But like any investment, it's not without its risks. While REITs provide a unique investment opportunity, they also come with potential risks. Let's dive into some of these. Firstly, there's market risk. Just like other investments, REITs are subject to the ups and downs of the market. External factors such as economic conditions, legislation changes, or even shifts in consumer behavior can impact the value of the real estate, and hence the returns from your REIT investment. Secondly, interest rate risk is another factor to consider. If interest rates rise, the cost of borrowing for REITs increases, which can eat into profits. This could lead to a decrease in the value of your investment. Finally, there's the risk of not having control over the properties. With REITs, you're essentially putting your money in the hands of the REIT managers. If they make poor investment decisions or fail to effectively manage the properties, it could negatively impact your returns. Despite these risks, many find the potential benefits of REITs to be appealing. They offer the chance to invest in real estate without the need for large amounts of capital or the hassle of managing properties. However, like any investment, it's crucial to do your homework. Research the REIT's track record, understand the properties they invest in, and consider the stability of the rental income. So, there you have it. Investing in real estate without the need to own physical property is possible with REITs. But remember, always do your homework before you invest.